Hi students, welcome to Sunil's tutorial. I'm Sunil Milwani and today we'll be doing this chapter called as Fire Insurance. We are going to do question number 17 in the books of Unfortunate Limited. In the books of Unfortunate Limited. Right? Let's see this. A fire occurred in the premises of Unfortunate Limited on 4th May 2004. All the stock with the exception of 13,000 was destroyed by fire. From the following figures, ascertain the loss suffered by the company. They give you data. Stock on 1st Jan 2003, 31st December 2003 and purchases during 2003, sales during 2003. Purchase of 2004, they have given you last year's data and current year's data. That means I need to make trading account and memorandum of trading account. Trading account is going to be my account for the last year, which is going to be from 1st Jan 03 to 31st December 03, and memorandum. When 2 years data is given to you, the previous year data is going to go into trading account, current year's data in the memorandum of trading account. Memorandum of trading account from 1st Jan 04 to 4th May 04. Okay, let's see this. A fire occurred in the books of Unfortunate Limited. Okay. Salvage we will see later. Let's see the entries, guys. Stock on 1st Jan 2003 to opening stock. Opening stock is given to you as 36,000. Next, buy closing stock. Closing stock is given to you as 66,000. Right? Next, purchases during the year. Purchases during the year, you will write here as to purchase. Purchases during the year are given to you as 4,80,000. Then sales during the year, buy sales. Sales during the year is given to you as 6 lakhs. Okay. Next, they've given you purchases in the year of fire is 2,30,000. Purchases in the year of fire is 2,30,000. Sales in the year of fire is given to you as 3 lakhs. Okay, let's move on ahead. On 20th December 2003, that's my previous year, also there was a fire which destroyed stock of genuine cost of rupees 10,000. There is a practice in the company to value stock at cost less 10%. Now, first of all, they are saying that there was a fire last year which destroyed goods of 10,000, right? Destroyed, that means goods are going out, debit what comes in, credit what goes out. By goods destroyed by fire, goods destroyed by fire is going to be 10,000. Next, they have also said that it is a practice of the company to value stock at cost less 10%. Working note 1. Now this was cost value. If the cost is 100, you are valuing it less 10%. So if I consider the opening stock of previous year is 36,000, right? Its value is 36,000. That means how much will its original cost be? 36,000 into 100 divided by 90, which will come out to 40,000. Right? Do we get this thing here? Now, let's see this. So this is going to be, X will work out to be 40,000. Similarly, I can work this for closing stock also. closing stock value is given to you as 66,000. So 66,000 into 100 divided by 90. No. You will not work this for closing stock because they've given you something else. Okay. Now before that, before I move on ahead, let's try this. So my opening stock is going to be 40,000. So add undervalued. It was undervalued by 4,000. Okay. Now they're saying that, but all of a sudden, this practice, all of a sudden it was changed. This practice, all of a sudden it changed this practice and value stock at cost plus 10%. Working note 2, cost value. Now for closing stock they changed the method. If the cost is 10, they valued it at cost plus 10%. So instead of 100, they valued it at 110. So my closing stock value of which is 66,000, its cost will be X, X will work out to be 60,000, right? So this can be written as less overvalued 6,000, so this will be 60,000. Whatever is the closing stock of previous year will be the opening stock of current year. So to opening stock is 60,000. Whatever is the closing stock of previous year will be the opening stock of current year. That's it. That's the data that's given to you. Let's start tallying, guys. First, let's tally trading account. This is 6,70,000. 6,70,000. The difference is going to be written as gross profit. Right? Gross profit will work out to be 1,50,000. How did I get that? 6,70,000 minus 40,000 minus 4,80,000. Right? Once I have this, then I can do working note 3. Find out gross profit ratio. Gross profit ratio is gross profit upon net sales into 100. So that is going to be 1,50,000 divided by net sales. 6 lakhs into 100. This is going to be 25%. Right? So my gross profit ratio will work out to be 25%. Once I know my gross profit ratio, then I can find out gross profit. Remember, gross profit ratio is always calculated from the trading account, and gross profit is calculated for memorandum of trading account. So gross profit is gross profit ratio into net sales. 25%. Net sales in the current year is 3 lakhs. So this is going to work out to be 75,000. Right? So gross profit of the current year to gross profit is 75,000. Once I have this, then I can tally this. This is going to be 2,30,000 plus 60,000 plus 75,000 will give you 3,65,000. 3,65,000. This is going to be my closing stock. This is going to be my balancing figure, which is going to be 65,000. Once I know my closing stock, then I can make statement of claim. This is going to be my working note 5. Statement of claim. Closing stock. Closing stock is given to you as 65,000 less salvage. How much is the salvage given to you? They've given you that right in the beginning. They've said that salvage is 13,000. So in that case, my loss by fire is going to be 52,000. Once I have this, then I can find out my claim amount. Working note 6. Claim is nothing but loss by fire upon closing stock into policy amount. Right? Loss by fire is 52,000. Closing stock. Closing stock is 60,000. and policy amount is 40,000, right? How much is the policy amount? 40,000, right? So in that case, when you work this out, this will come out to be 32,000. So the claim that you will get here is 32,000, right? Next, let's move on to the next sum, guys. We did the 13th, no, we did the 17th sum. Next, let's move on to the 18th sum. Question number 18. They're saying a fire occurred in the books of Miss Deepa. So in the books of Miss Deepa, right? Let's see this. On 14th October, from the following particulars, ascertain the loss of stock and prepare a statement of claim to be lodged with the insurance company. Now, they've given you stock of the previous year and stock of the current year. That means you will be required to make a trading account and a memorandum of trading account. Right? My previous year is from 1st Jan 2002 to 31st December 2002. My current year is from 1st Jan 2003 to 14th October 03. Okay, let's start. Stock. Opening stock is given to you. Opening stock. Stock of the previous year. Opening stock of the previous year. Given to you as 61,200. Next, two purchases. Purchases of previous year is given to you as 2,44,000. 2,44,000. Next, sales of the previous year. By sales. Sales of previous year is given to you as 3,60,000. Next, they've also given you closing stock of previous year. Closing stock of previous year is given to you as 54,000. Next, purchases of current year. Two purchases. Purchases of current year is given to you as 2,94,000. Next, sales of current year is given to you as 3 lakh. By sales, 3 lakhs, right? Let's start. Stock is valued at 90% of cost. Okay. Okay. Let's see this working note 1. Cost value. Right. Stock is valued. If the cost is 100, stock is valued at 90% of cost. That means its value. The value of the stock is going to be 90%. Let's see opening stock. They've given us the value of opening stock to be 61,200. In that case, what will be the actual cost of opening stock? This will work out to be 68,000. Right? 61,200 into 100 divided by 90 will give you 68,000. So this is 68,000 to 6,800. This is going to be add undervalued. Right. Similarly, I can work this for closing stock also. The value of closing stock is given to you as 54,000. So what will its cost be? 54,000 into 100 divided by 90. 54. You want to ask me something?
Yeah, you took 6800 for what? Okay, that will work.
Right. 54,000 into 100 divided by 90 is going to be 60,000. So in that case, this is 60,000 and undervalued by 6,000. Whatever is the closing stock of previous year will be the opening stock of current year. Opening stock 60,000. Next, is there anything else given to you? That's it. Simple sum. Let's tally this, guys. 3 lakh 60, 4 lakh 20,000. This is 4 lakh 20,000. This is going to be 2 gross profit carried out. Gross profit carried out when you work this out is going to be 1 lakh 8,000. Right? Now let's see this working note 2. You want gross profit ratio. Gross profit ratio is gross profit upon net sales into 100. Gross profit is 1,08,000 upon net sales. Net sales is 3,60,000 into 100. Right? So when you work this out, you should get your gross profit ratio as 30%. Once you have this, then you can find out working note 3. Gross profit. Gross profit is gross profit ratio into net sales. 30 upon 100 into net sales. 3 lakhs. So that is going to be 90,000. So my gross profit for the current year is 90,000. To gross profit 90,000. Tally the memorandum of trading account. So when you tally this, this will be 4,44,000. This is 4,44,000. This is going to be by closing stock. This is balancing figure 1,44,000. Right? Once I have closing stock, then I can make statement of claim. That's going to be my working note 4. Statement of claim, which will have closing stock. Closing stock is 1,44,000 less salvage. Salvage is given to you as 36,000. So in that case, loss by fire is going to be 1,44,000 minus 36,000. That's salvage was 36,000. So in that case, this is going to be 1,08,000. Once I have this, then working note 5, claim amount. Claim amount is loss by fire upon closing stock into policy amount. Loss by fire is 1,08,000. Closing stock is 1,44,000 into policy amount. Policy amount is given to you as 1,26,000. So when you work this out, you will get your claim to be 94,500. Right? Next, let's move on to the next sum, guys. Next, let's see the next sum, guys. Let's see question number 19. Question number 19. A fire occurred in the premises of X and Company. So in the books of X and Company, right, the following amounts are available. Let's see this. Again, here they've given you 2 years data, 2002 and 2003 data. Since they've given you 2 years data, you will have to make trading account and you will have to make memorandum of trading account. Right, trading account is going to be from 1st Jan 02 to 31st December 03, and memorandum will be from 1st Jan 03 to the date of fire, which is 15 September 03. Right, let's start. They give you stock and cost. So that's opening stock of trading account. Opening stock is given to you as 20,000. Next, stock on 1st Jan 2003. Now whether I say 1st Jan 2003 or 31st December 2002, it is the same thing. So this is going to be my closing stock of the previous year, which is 30,000, and it is also going to be the opening stock of the current year. stock 30,000. Right, let's move on ahead. Purchases for 2002. 31st December 2002. Two purchases. Purchases are given to you as 40,000. Right? Then purchases for the current year is given to you as 88,000. Purchase 88,000. Next, sales for the previous year. By sales for the previous year is given to you as 60,000. Next, sales for the current year. By sales for the current year is given to you as 1,05,000. Next, during the current year, the cost of purchase has risen by 10% over the last year, right? Working note 1. So far they were giving you adjustment with opening and closing stock. Here they are giving you adjustment with purchase and sale. Now purchase, right? They have said that during the current year, the cost of purchase has risen by 10% over the last year. Current year. Last year, if a product was purchased at 100 rupees, the prices have gone up by 10%. So current year, the product will be available for 110 rupees. The prices have gone up by 10%. That means whatever was available last year for 100 rupees, in the current year it will be available for 110 rupees. In the current year, I have made purchases of 88,000. That means as per last year's record, how much purchase I must have made? I must have made purchases of X, which is going to be 80,000. So purchases as per last year's records are going to be 88,000 less overvalued. Purchases have been overvalued by 8,000. Right? Similarly, they are saying that selling price has gone up by 5%. Selling price has gone up by 5%. Working note 2. Sales. Last year, current year. Last year, if a product was sold at 100 rupees, they are saying that prices have gone up by 5%. That means in the current year, it will be sold for 105 rupees. In the current year, your sales are 1,05,000. So what should be your sales as per last year's records? 1 lakh. Right? So in that case, this is going to be 1 lakh less overvalued 5,000. Anything else given to you? No. Let's start tallying, guys. This is going to be 90,000. This is going to be 90,000 to gross profit 60. So 30,000 is going to be my gross profit. Once I have my gross profit, then I can find out my gross profit ratio. Gross profit ratio is gross profit upon net sales into 100. Gross profit you just found out is 30,000. Net sales is 60,000 into 100, which works out to be 50%. Once you have your gross profit ratio, then you can find out gross profit. Gross profit is gross profit ratio into net sales. That is 50% into net sales. Net sales in the current year is 1 lakh. So in that case, this will be 50,000. That means to gross profit of the current year is 50,000. Tally this. This is going to be 80 and 80, 1,60,000. So this is going to be 1,60,000. This is going to be by closing stock. This is my balancing figure, which is going to be 60,000. Right? Once I have this, then I can do working note 5. I can make my statement of claim. Closing stock. Closing stock is 60,000 less salvage. Salvage is given to you as 2,000. They've given you salvage as 2,000. Right? Now, For calculating the closing stock, you took the prices to last year. Now, if closing stock is valued at 60,000 last year, when you submit the insurance claim this year, you will be paid as per the current year prices. Question, sir, if you're going to be paid as per the current year's prices, why did you convert it into last year's prices? Because I was going to take the gross profit ratio from the last year. Therefore, in the memorandum also I wanted the last year's prices. Right? So as per last year's records, the stock is valued at 60,000. Right? You just make another working note here, working note 6. So this is last year, current year. Last year, if a product was for 100 rupees, if I purchased a product for 100 rupees, in the current year it would have increased by 10% and its purchase price would have been 110. As per last year's records, I have got closing stock of 60,000. That means as per current year's records, it should be 66,000. Right? As per current year's records, it should be 66,000. Right? So your closing stock, instead of 60,000, I will be writing it as 66,000. 66,000 is my closing stock, 2,000 is salvage. Therefore, loss by fire is going to be 64,000. Once you have this, working note 6, you find out the claim. Claim is loss by fire upon closing stock into policy amount. Loss by fire is 64,000, closing stock is 66,000, policy amount. No, there is no policy amount. Since there is no policy amount, therefore your loss by fire will be your claim. So claim will therefore be 64,000. Fine, do we get this thing clear? Next, let's move on to the next one, guys. Okay, let's see the next sum, guys. We did the 19 sum. Let's see illustration 20. Illustration 20. On 1st April 2004, there was a devastating fire in the godown of Celia. In the books of Celia. Okay, Enterprise, which destroyed the stock and also their books of accounts. However, they were able to obtain the following information from their stock, income tax and sales tax consultant. Okay, they've given you 2 years data. Let's see this. 2 years data, that means I need to make trading account and I need to make memorandum of trading account. Now, trading account is for the year ending 31st December 2003. That means it is going to be from 1st Jan 03 to 31st December 03, right? And April, they're saying that a fire occurred in April from 1st Jan 04 to 31st March 04. That's my memorandum of trading. Now, let's see this. Now, they've given you that sales for the previous year straight away by sales. Sales for the previous year is given to you as 8 lakhs. Sales for the current year, but for the current year they've given you sales only for Jan and Feb. They haven't given you the sales for March, which is 80,000. So we will have to calculate. We will see that with the adjustment. Purchases for the previous year. Purchases for the previous year is 3,65,000. Right? Purchases for the current year. Again, for purchases for the current year, they've given you purchases of only Jan and Feb and not March, which is given to you as 24,000. That means I'll have to calculate for March. Next, stock, opening stock is given to you as 1 lakh. Opening stock of previous year is given to you as 1 lakh. Closing stock of previous year is given to you as 45,000. Closing stock of previous year is given to you as 45,000. Whatever is the closing stock of previous year becomes the opening stock of current year. 45,000. Next, they've also said that wages for the year, wages in the current year, they have said for 31st, no, this is previous year. Wages for the previous year is wages of the previous year is 1,08,000, and they're also giving you other direct expenses for previous year. Other direct expenses for previous year is 72,000. Okay, now let's see that sales and purchase for March may be assumed as having been made at the same rate as in the past 2 months. Now guys, see this. For 2 months my sales is 80,000. That means per month my sales must have been 40,000. How did I get that? I divided that by 2. So for March it will be another 40,000 because they are saying it is occurring at the same rate. So this will become 1,20,000. Similarly, for 2 months my purchase is 24,000. That means for each month my purchase is 12,000. March 12,000. So this will become 36,000. Right? Okay. In Jan 2004, that means in the current year, a theft took place as a result of which goods of value of 6,000 were lost. Right? By goods lost. Now remember one thing guys, they are saying goods of the sale value 6,000 were lost. You cannot sell to yourself at selling price. So if any goods have been destroyed by fire or have been stolen, all that has to be converted at cost price, right? Wages and other direct expenses may be taken after 31st December as the same rate on sales as in the previous year. Same rate on sales as in the previous year, right? Now, to wages. Now, wages for the entire last year was 1,08,000, which was for 12 months. In the current year, it's only for 3 months. So for 3 months, it will be 1,08,000 into 3 divided by 12, which will work out to be 27,000. At the same rate as it occurred in the last year. Whatever was the monthly wage rate as last year, same should be the monthly wage rate for the current year also. Similarly, to other direct expenses. Other direct expenses was 72,000 for the whole year. So for per month, it will be 72,000 divided by 12. In the current year, there are 3 months up to the date of the fire, so it will be 72,000 into 3 divided by 12, which will work out to be 18,000. Right? Once you have that, next, what else have they said? Insurance policy has been taken, salvages so much. Right? Let's start tallying guys. This is 8,45,000. This is 8,45,000. This is going to be 2 gross profit carry down. Gross profit carry down is going to be 2 lakhs. Right? Now, let's go on to working note guys. Let's see working note 1. Let's find out gross profit ratio. Gross profit upon net sales into 100. So that's 2 lakhs divided by net sales. 8 lakhs into 100. That is 20%. No, not 20%, 25%. Right, once I have this, then I can find out working note 2. Gross profit. Gross profit is gross profit ratio into net sales. That's 25% of net sales. Net sales in the current year is 1,20,000. Right? So 25% of 1,20,000 which will work out to be 30,000. So this will be 2 gross profit. Gross profit for the current year is going to be 30,000. Right? Let's tally this. When you add this, this comes to 1,56,000. Now, you also know the gross profit ratio. So let's find out what is the cost of the goods lost. Working note 3. You will have cost of goods lost. Cost price, selling price. Right? Now they are saying that my profit is 75%. If my profit is 75%, that means, sorry, my profit is 25%. If my profit is 25%, that means the cost price will have to be 75%. See this, guys. If I say cost price, selling price, if the selling price is 100 and profit is 25, that means the cost price will have to be 75. The selling price of the goods which have been lost is 6,000. So what will be the cost price of the goods lost? The cost price of the goods lost is going to be 4,500. So here you will say less profit 1,500. That will come to 4,500. Right? Now 1,56,000. This is going to be by closing stock. This is going to be my balancing figure. So your closing stock will work out to be 31,500. Once I have closing stock, then I can make statement of claim. Working note 4. Statement of claim. Statement of claim, first you will have closing stock. Closing stock is 31,500 less salvage. How much is the salvage given to you? They've said salvage is 5,000. So this is going to be 26,500. That's my loss by fire. Once I have loss by fire, then I can find out my claim amount. Claim is loss by fire upon closing stock into policy amount. Loss is 26,500, closing stock is 31,500, policy amount is given to you as 22,500. Right? When you work this out, your claim should come to 18,929. Right? Okay, we'll stop this here for the day. Thank you very much.